much awaited Q3 GDP numbers are out. The third quarter or Q3 refers to the months of October, November and December. Let's see how the Indian economy has performed in the 3 months ended 2022. Now we will talk about the GDP numbers briefly in this DITM by capturing the broader trends, and we will further do an in-depth analysis on the GDP numbers in this week's Third Umpire, focusing more on the expenditure components of the GDP and the sectoral GVA data. Do watch it. The Indian economy recorded year-on-year growth of 4.4% in October to December, down from 6.3% in July to September. Now, this growth number is broadly in line with RBI's own projections. However, there is a loss in growth momentum, as you can see on the chart on your screen. Now, this is on the back of fading away of favorable base effect, slowdown in pent-up demand due to high inflation interest rates, and contraction in the manufacturing sector. Now, we see how inflation, rising interest rates, and a weak external demand has taken a toll on the country's economic growth in Q3. While the GDP in Q3 has slowed, the sequential improvement in Q3 over Q2 was around 3.5%. Also, GDP growth increased quite well to 11.6% in Q3 over pre-COVID levels. Now, this signals the economy's resilience despite the challenging global economic environment. Now, in the near to medium term, we believe improvement in consumption, decline in commodity prices, government's continued focus on capital expenditure, and improving agricultural growth will support GDP growth. However, there are challenges that the Indian economy will face. Having said that, if India needs to grow at a sustainable annual rate of 6 to 7%, we need solid execution of the current policy efforts and favorable macro conditions. Semiconductor chips are used virtually in every electronic device and have wide usage in different industries like smartphones to computers, from cars to household appliances. Now, according to a report by Deloitte, India's semiconductor industry is expected to hit $55 billion by 2026. Now, this will be on the back of growing demand from smartphones and wearables, automotive components, computing and data storage sectors, which will contribute more than 60% to the semiconductor industry. Now, the 2-year-long semiconductor chip scarcity has highlighted the value of the semiconductor sector and has also highlighted India's vulnerabilities in this area. Now, we remember how this chip scarcity caused by supply chain disruptions severely impacted manufacturers of everything from phones to cars, and the governments around the world sought to lessen reliance on imports and build their own semiconductor manufacturing units. Now, with growing demand for semiconductor, India also needs some minimum semiconductor capabilities domestically. Now, India has gone a step higher and made massive strides to tackle this. The government in December 2021 announced Rs 76,000 crore PLI scheme for development of semiconductor and display manufacturing ecosystem. Now, to put some cherry on the top, the government is providing fiscal support for 50% of the project cost across all technology nodes for setting up a semiconductor fabrication plants. Now, though there will be challenges along the way because of the complexity of semiconductor production, the scale of investments made by the government is a positive. So what does these news mean for you? India's economy has slowed to 4.4% in Q3 but came in line with RBI's forecast. Amid several headwinds, India saw a sequential growth of 3.5% and a growth of 11.6% over pre-COVID levels. This will have an indirect neutral impact on you. The demand for semiconductor products in India is primarily driven by the increasing adoption of smartphones, growing demand for electronic devices in the automotive and industrial sectors. Now, with growing demand, the semiconductor industry in India is poised to play an important role, and the government's step towards promoting domestic manufacturing of semiconductors is also a positive. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.